Okay, hello everybody. Alex won't be on the Zoom today. He's busy doing a couple of personal things, so he'll probably be back next week. But we are probably planning on hosting a free webinar tomorrow for the free channel. So if you guys are always welcome to join, I'm probably going to go over the exact same things I'm going to go over today, except maybe this one part, something that I've been kind of just looking into on the side that I'll show you guys that maybe could benefit you all. It's just I'll go ahead and get into that here in the next couple of minutes. But yeah, you guys are welcome to join if you guys want to come in for the free webinar tomorrow. And also good news, like I said last week, the ebook is done. All I'm waiting for now is I'm waiting for the admins to send me their final reviews on if there's anything to fix, anything to alter. But overall, everything is done. I actually have like a small promo ebook that I'm going to just give you guys on the Discord. And I kind of just got everything sorted, and we'll get into the details with that once that part comes in. But let's just go ahead and get to my trade of the week, which was AUDUSD. It was a structural disruption. So whenever I will say that the structural disruption model is probably the least used model for me. The reason why I say that is because from an objective POV, a structural disruption is always going to be technically a counter trend externally. What do I mean by that? Well, as you can see, we're technically bullish, and in order for the structural disruption to occur, it would need to be a bearish transition or a failed bullish continuation on a bullish trend, therefore meaning that we can now be bearish. So my entire approach here is, look, I know that we are bullish. The last solidified point here before we went into the high, CBOS solidifies the high. We have a pullback internally bearish, right? And whenever I'm seeing or I'm looking for a structural disruption, I want to see where the low is bouncing from as well. So as we can see, there is a type of POI here that then creates a reaction. The reaction not only confirms the POI, it also solidifies the low based on the internal break here, right? Because obviously there has been no break of a high that creates a low in this entire trend or this entire micro trend. And by that, I mean the pullback. So high into low, high was never broken. High into low, high was never broken. High into low, this high is broken, which is what solidifies, right, the internal, that solidifies the low based on the POI, right, which then signifies to me that this low, after it's been solidified, we have a low into a high, into a retracement, and this retracement realistically should be giving me a new high if we are to continue bullish, right? And it definitely tried. By that I mean we obviously have a clear reaction from a POI, but this reaction was not able to fully break through the high internally. So because we have this as well, then there's also an internal order flow disruption based on maybe a micro reaction based on this POI that's present here. So, but either way, that's not necessarily why I took the trade. The main reason why I'm taking this trade is because we have a bullish trend, we have a structural disruption, and I'm aiming for the previous low, which wasn't the best idea. And I will go ahead and review that here in the after. Right, I ended up having to kind of trail my stop, and what ended up happening was this actually should have been my TP, which is the relative equal lows. That was met, and I shouldn't have been aiming for, I'm sorry, the original target that I had mentioned. And if we want to, or if I can tell you why, that is here, right? So as I'm managing the trade, right, obviously I enter here, right, get into a bit of drawdown, but I cannot move my stop until we have this break here, right? The reason why the only reason why I will ever move my SL or my invalidation is we have a CBOS continuation, and that is what happened here, right? Because internally there is a bearish trend, we have a CBOS here, and then we have the continuation. Once the continuation has been met, then I can move my invalidation, right? The exact same thing happened, here via creating an internal LGC model. So once we have the CBOS continuation, then I can now move my invalidation here, right? And realistically, I could have taken maybe another position here as well. I don't know how the RR would have been on that scenario. We'll check it out here after I'm done showing you guys this. But that LGC created a new invalidation, right? Once again, I put an order flow continuation here. It's the fourth model. I don't really use it anymore. I just think it's the least consistent model. It actually has like probably the worst win rate out of any of the other models for me. So the order flow continuation model is not really something I really promote anymore, but I acknowledge it, which is essentially just a continuation of mitigation. So 1, 2, that would for me would be a order flow continuation, which is pretty much the original 2 mitigation model that is very essential to smart money concepts. But yeah, I just acknowledge it there. Oh, let me see, mute you guys mics. Okay. But once again, CBOS continuation. Therefore, I can move my invalidation here. And a rule that I know I've stated with you guys before is that once I am essentially 80 to 90% of the way to my TP, I usually like to trail my stop very, very closely. The reason why I do that is because honestly, like I've told you guys this before, it's like a PTSD thing. It's just like, look, like I've been here before. I have seen trades kick or come about 1 to 2 pips from my TP, even less than a pip from my TP, just for it to completely reverse, right? That may not and that's not necessarily like a model problem. It's probably just an environmental problem. By that I mean where we are in the market, externally, internally, and even the external of the external. So there's just some things we just cannot control. But what we can control is when I am exiting the trade. So as I'm trailing this here, then I know that as we're continuing lower, note that my TP missed by like a pipette, maybe 2. And as soon as that had happened, I noticed that we created an internal low based on here. So I trailed my stop here because now look, if we are to break here and then we are to break higher, then that is considered an internal structural disruption, right? Which now means that we could technically reverse, and we don't know if this will reverse here or there's no other POI besides that. So assuming that it's going to react from a potential POI again, I think is a bit unrealistic. And the only reason why I say unrealistic is because if we go back to our original chart, we are externally bullish, so I'm looking to take my TP kind of as fast as possible. So as soon as I saw the internal break here, then I moved my stop loss here, right? Because now I'm only risking potentially 3 pips of profit rather than risking from 86 to here about 16 pips of profit, which is pretty much the entire position. So I'm not willing to risk the entire position's profit just for another pullback to then potentially go or potentially just reverse on me. So I ended up closing the trade based on the internal structural disruption present here. And I will go ahead and show you guys the result of that right here. Delete this. Right, so here's where we exited the trade, and it actually ended up going well beyond that POI. And what ended up happening after that was we ended up hitting my theoretical stop loss, my original invalidation point. So you guys see what I mean? This is something that's happened a lot over the years, and it's just something that I'm just completely sick of. That if I am like 1 or 2 pips next to my TP, it just automatically reverses. So the solution to that is I'm going to trail my stop immediately, or as close as I possibly can, while still maintaining some type of rule set. And a lot of the biggest mistake I see with people who are moving their stop loss is, for example, as soon as they see a break of structure, they move the SL, right? As soon as they see a break of structure, they move the SL, which is, it can work. Don't get me wrong, it can work. But who is to say you don't see this as an internal LGC? You move your SL here, and then you get the break even, and then it goes in your favorite direction, right? So rather than wanting to be one-dimensional with just waiting for a break of structure to then move your SL, wait for the CBOS like I do, right? CBOS continuation, move SL. CBOS continuation, move SL. That's kind of been the most consistent way of me moving my SL, because we're essentially waiting for structural ranges to be created within the trend. So micro trends within the trend. And it's been very effective so far. And then now, like I said, once I'm close to my take profit, then now, okay, I'm going to trail it to the most immediate high, right? And as soon as anything is solidified, then I'm moving it there as well, right? Because now, rather than risking the entire position, the time loss as well, I get most of my position and I save myself a pretty big headache. You know what I mean? So yeah, that's that. Let's see that LGC entry that I showed you guys, which is here. Let's say I was to theoretically have taken the no POI there. I think it was just based on the M1. Oh, perfect. Oh, LGC here. No, yeah, it would have been off of M1. Just theoretically, I wonder if this position would have worked out. Right, SL at the invalidation, which is a solidified point. Because if we are to then hit the invalidation here, then that creates unwillingness based on this low, and we could potentially be seeing another low high retracement continuation, which is why I'm always hesitant a bit with the structural disruption model, just because it is inherently a reversal. But yeah, interesting. This would have actually been way better than what is going on here. Okay. This actually would have been better than the original position of 1 to 3. So very, very good. Just goes to show you don't necessarily need to get the best entry per se in terms of catching the absolute high or the absolute low to get the best result. So overall, very big trade. But that concludes that. And then last one was just it was a back test that I just watched yesterday. I actually saw this after I saw this right around here. So I was like, yeah, it's too late to take the trade. It's too late to take the before. So I just said, you know what? I think this is a textbook order flow disruption. So I'll just go ahead and show you guys. So we are obviously internally bearish, right? I see that we have a CBOS here, continuation. What caused the CBOS? This entire move. So I consider this entire move to be a buy to sell move or a buy to sell region. And that buy to sell region that was then came back to be mitigated, right? And then we had a confirmed reaction because we had a solidified low here be taken out. So this is now a confirmed reaction based on this POI. So realistically, we should be aiming for here. But once we cause unwillingness, break through that, or we break through this to cause unwillingness, and then we break through the POI, then that is OFD. OFD. So because that is OFD, I'm now looking for a sell to buy in the opposite direction. And the sell to buy would have been here, because this candle did take a couple of wicks. And it is a very, very clear engulfing candle or engulfing bullish candle right after that, meaning we also left behind inefficiency. So my or the theoretical position would have been enter at the inefficiency, and my exit is at a bullish POI or at a bearish POI. And the reason why that is because we are externally bearish. But yeah, this could have been held on even further, I believe. I think this went on. Yeah, this actually went on to take out the high. I believe there's somebody in this position as well. But yeah, that ended up going very, very high. And then this has been melting today. I see a lot of continuations here. But yeah, that was the back test. That is that. Now I guess is for the semi-big announcement. Let me just go ahead and post this in the... Or actually, I'll show you guys. I'll post it after the Zoom. Right, so the book is done. The book is, like I said, it's essentially done. I'm just waiting to get some final reviews and some final feedback just to make sure that I didn't misword anything or something is unclear or maybe something messed up. But yeah, like I said, I'm gonna send you guys this here in the on the Discord probably after this call. And this is essentially, like I said, the table of contents. And I know I've shown you guys this before, but I also included the first page of the book just so you guys can see the tone of how I'm writing this book. And yeah, what do you guys think of the book? What do you guys think of this compared to, let's say, like a course again? Because honestly, I thought this was way better than a course because everything is kind of on like on a type of textbook basically, but and there's no real language. Well, there is a language barrier, of course, but a lot of people may not be able to understand my voice. So I think this is the most efficient way of me showing you guys all of the content in one place. But yeah, in terms of pricing, let me ask you guys something actually first. What would you guys be willing to pay? I already have the price, so whatever you guys say probably won't change that or in any way. So what would you guys think is a relatively good price point for potentially what is going to be in this book? And just go ahead and be honest. Like what is essentially the willingness to pay? How, like, what is the cap? Because I doing the whole pricing thing, I actually went back and forth with it for like a week. And I finally came to like a simple, straightforward price point that I think everybody can afford. Anyone? I know it's a bit of a iffy question, but any answers would be appreciated. That would be like the cap for you, $200. That would be like the cap. Because at the end of the day, it is a book, so I can't really make it a hefty price point. You know what I mean? I can't make it too hefty. Like, no, yeah, of course, it depends 100% on the person who's buying, but I'm kind of just asking for you guys' opinion. $180 to $250. Anybody else? Is anybody on a much lower scale than that? Because obviously I know how the USD is kind of a lot in some countries. So what does everybody else think? Is anybody like on a lower scale than 200, 180, or 250? Anyone in US? Yeah. Yeah. What number would you be thinking or considering? Because obviously, let me tell you guys, everything in the book, this is everything that I've pretty much ever mentioned. I think the only thing that I can recall that I did not include in here is turbulence points. But the reason why I didn't include turbulence points is because they're technically like buy-to-sell regions. So I just kind of added that to the SC chapter. But yeah, what number would you say, Ronaldo? $75 to $150? That's fair. That's fair. $250? That's fair. Cool. Well, here's the thing. This book is going to cost, let me One sec. A whole. Fuck. $100. That's the price point. That's all it's going to be. $100. I think it's a fair price. I think anybody can pay for it. It's whatever. The first, I will say, the first idea that I had was 250. That was the first number that I had. But I'm like, you know what? End of the day, it's a fucking book. Like, it's a book. But yeah, the book is going to cost a whole $100. What do you guys think? And it should be releasing best bet next week, but $100. I just thought that's a fair price point. It did take me a long time, whatever, blah, 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 but who cares? Like, I just want to make it accessible to everybody, but I also want to get something out of it. You know what I mean? But yeah, what do you guys think of 100? It's also about 100 pages. Yeah, I think $100 is fair, and I'm just gonna keep that across the board. Yeah, because really, I wanted Alex to be on the call, but as you guys know, we've been working together. We actually merged the companies and stuff. So I'm actually going to, like, my entire goal now is to kind of help him build the fund. And with building the fund, that's a completely different avenue than anything that we've ever done. So I kind of want him to get on here and give you guys like the raw details with that and see what you guys think. But that'll probably be what we do next week, because obviously he's not on the call today. But yeah, like the next step now, I've finished the book. I'm going to complete the commitments with you guys. I still do journals every week. I still do Zooms every week. But I'm going to really put more focus onto now building the fund now that this book is done. But yeah, what do you guys think? Any thoughts on that? I do have one last thing I want to show you guys. Any thoughts on that, or move on? What do you think about hard copy? You know what? A lot of people are telling me to go the hard copy route. I would just need to figure out the chart work, because you know, you guys know, if you ever copy and paste a trading view image, like it depends on the resolution and whatever, but a lot of the times the PDF version is like ideal because you can zoom in and it automatically adds the resolution for you to see all the details. Whereas if you have it on a book and something is unclear, then it could kind of be very blurry. So I'd have to speak to like a publisher about that. But at the same time, like if I was to make a hard copy, I have a lot of chart work at the end, but I'd have to maybe remove all the chart work at the end. I'd just keep the lessons alone, and I could maybe charge, like, I'd have to charge way less. I'd have to charge maybe like anywhere from $30 to $50 for the hard copy. You know what I mean? But I think it would be cool. Like, I would say one of my life goals is to make a book, like a real book. But yeah, a lot of people are bringing that up, and no. I don't mean any chart work at all. Like, obviously all of the lessons, like let's say in SC, every chart or everything on the book has like 3 or 4 examples to it. But after I finish the lessons, I include a bunch of other chart work, which is like before afters, and then a bunch of reviews that I've done. But yeah, I'm not saying I'm going to remove the entire chart work from the book. I'm just saying I'm going to remove the chart work at the end of the book, like everything that's after the lessons. Or maybe I could keep the before afters. Who knows? We'll see. We'll see. Yeah, I guess so. I guess so. But yeah, last thing I want to show you guys before we hop off. Who has been with anything RCV for, let's say, since back in the day? Since back in the day, like back, like does anybody here remember when we used to trade Fibs and we used to trade like 61A like religiously? Does anybody remember that? Was anybody here for that? Yes, Brian, you're right. Yes, I do remember. Yes. Um, you know what, man? I'm yeah. No. But like when we used to trade stuff like this, like 61,871, that used to be like my bread and butter back in the day. And I don't know why I kind of steered away from it. I wouldn't be able to tell you. Let's see. See, like this is back in 2018. I was using the fib very incorrectly here, I will say. I was using this very incorrectly. But I made some modern day updates. I went to the same day and I kind of was just looking at it and I'm like, wow, like who's to say we can't use Fibs today with the information that we're using today as well? And I started thinking, and this whole week, everywhere, every day, I've just kind of been looking at previous move deliveries, and I've been measuring to see if I can follow structural rules with a fib and see if we can get some type of success. And here's what I've been kind of just been kind of doing it for fun. Where, let's see, where is the first example? I think this is earlier this week. Yeah, this is earlier this week. I didn't take this trade or anything. It was just something that I saw after that it happened. I just don't worry about that. But something I've been noticing is like, look, if we are looking at a solidified range, which would be technically from right CBOS, we break through, solidifies the low, come into the high, internal CBOS solidifies the high, and I've really just been playing around with the fib, and it is disgustingly accurate, man. Disgustingly accurate. It has been so accurate, and it's obviously I haven't fully looked through this. I've only like looked at it through my pairs for this week. But bro, this has been so accurate. Because, and I guess it could be like a geometry thing. I don't know. I don't really want to get into that stuff. It's not really my expertise. But as you can see, just if we can solidify a structural range and we can use the fib, and if there's more confluence with the fib, then it could be something that's very viable. And the reason why I really like the fib is because no matter which way you use it for bullish or bearish scenarios, you are guaranteeing that you are buying a discount and that you're selling a premium. You're guaranteeing it, at least from an external, because as you guys know, back in the day, this was like the method of trading back in the day. It was, okay, we saw a fib, we see that we were bullish, we find a fib, and then in order to get the entry, because price is fractal, we then fib the internal as well. So I'm looking for either the fib extension here or the previous high here, and just based on that alone, I would be looking for, oh yeah, you can see even this is why I marked this up here, that the internal 61.8, which is also, if I wanted to add confluence, I'm looking at the last sell to buy region, because this is the final sell that took out liquidity here and then created the movement to the upside, which matched the external. That adds confluence and it adds up with the 61.8. SL is always at invalidation, right? Always at invalidation. And we could have even aimed for the fib extension. And that's a 1 to 5, you know what I mean? Obviously this was a news move, or I believe it was a news move, but it's been very accurate, man. And we'll walk through price here just so you guys can see what I mean, because I actually saw it happen today as well. But like, for example, internally bearish, right? We see this liquidity grab, but this is only CBOS. We then have unwillingness break here, and then we have a solidified range or a solidified break here, because this is unwillingness externally. So we have a low into a high. That is technically a CBOS. What is the final low that went into the high? That would be here. So from there, once again, $61.8 plus turbulence point slash potential POI here. You could even use the entire sell to buy region. But once again, 61.8 gets you into the brand new range, and the Fib extension works out as well. But yeah, it's something I'm definitely going to be backtesting. I tried it here as well. It didn't reach here when I did this from low into high because solidified range was created. But there could be a way to make a very simple model solely of using structural rules, Fibonacci's, and just finding a POI. And I think it's very efficient because I think that we want to simplify the approach as much as possible, because then that gives you the availability to even create like a type of EA from it. That's why you want to kind of simplify your processes, because if everything is very subjective, then it's very hard to, let's say, code that. So who knows, maybe I could come up with something down the line, not to sell, but I mean just to have. But yeah, what do you guys think of this whole Fib thing? 61.8 again, came back into the zero, didn't reach the Fib extension. And then there was this trend. This was the back test from yesterday, where we have a solidified range internally, solidified point comes into the high, 61.8, SL at invalidation. We're aiming for the TP, 1 to 3. And you can always assume almost a 1 to 2, 1 to 3. It just depends on how you structure your targets. Whether you want to take the target based on the Fib, based on the structure, or based on the extension, or based on an external POI. Really just depends. But yeah, I think this is very interesting. I think this can be a semi-decent game changer, if I'm being honest. Because as you can see here from today's move, right, we have relative equal highs, 1, 2, 3. That is then swept. And from there, right, we then gave a internal LG, but it's more so just a big time sweep. And how do we understand that as a sweep? This is also in the book. I actually like clarified this stuff as well. Is when pretty much a sweep is when we see relative equal highs, swept, and then let's say there is a structure tap to then continue. Rather than it continuing, there is a transition here that prevents this from continuing, fails, and then now is when you can continue. Can you try to set a TP based on Fib extension? Yes, you can. The only popular numbers that I know, yeah, I'll show you, is I'll show them to you right here. These are the two Fib extensions that I know of, which is the -27, -61.8. Those are the only two that I know. But there is a lot of ways to go about this. You could take a partial at the 0, take a partial at the -27, and then partial at this -61.8. But for me, honestly, I probably wouldn't use the -61.8. I would more so just find my targets based on whatever it is that the chart is showing me. And I'm only using the Fib to guarantee myself buying a premiums. I mean, buying a discount, selling a premium. You know what I mean? So as soon as we saw this come in, like I said, because we have 1, 2, 3 highs, right? We have a potential continuation here. We have a POI that technically failed. And then we broke through the final low that went into the high. So that's a confirmed LG. So we have the transition. So I now have a confirmed sweep. We then broke the structure here as well. So we have a CBOS here. So let's see. Did this? I don't even know if this actually reached. Let's actually see. See, once again, turbulence point, 61.8. You could enter based on the turbulence point, but SL at invalidation. There, SL at invalidation. And you can see this is bleeding out. You know what I mean? bleeding. And even if that isn't caught, there's always like internal plays as well. Like you can use this to find a narrative because of the fractal nature, just as we use a order flow disruption to give us an entry, we can use an order flow disruption externally to give us a bias. So that could provide a bias, and then internally, there is more ways to play about it as well. Like you could see a liquidity grab there. So then you have a CBOS there. So you technically have, oh, this one didn't reach. Okay. So you see it's not perfect, didn't reach, but there's a turbulence point. Excuse me. But yeah, I'm not saying it's perfect. I'm not saying anything, but I think it's very cool because there's even a clear LGC model here as well. Here, LGC, failed bullish attempt, internal LG continuation because we were bearish because that's where we're coming from. And from there, let me do that again. As you can see there, that 61.8, and then from the LGC itself, 61.8, 71 again. You see what I mean? So I'm not saying this is reacting from the POI. Like I said, I'm going to repeat this for the third time. The reason why I really like the Fib is because it guarantees you to buy a discount and sell a premium. You just obviously have to know how to go from, you have to go from swing high to swing low, obviously, if you're in a bearish sense, and if you're in a bullish sense, then you got to go from swing low to swing high. Right? So I think it's really cool. It's something I'm definitely going to be using. And who knows, maybe I could create a separate model or a fifth model just based on that alone. But yeah, what do you guys think? It's kind of like falling back into our roots. Because I will say, I would say maybe the reason why, because I couldn't really remember why we stopped using the Fibs, and I think it was, I'll be honest, I think it was pride and ego. If I'm being honest, I think it was pride and ego, and just kind of trying to shit on the whole retail approach. But it's just like over the years, we've all understood, especially me, that it's not really about the actual strategy that you're using. It's about the how you apply it. It's have you tested it? How does it work in certain environments? How do you find your bias, right? And we have the DLE approach, which is direction, liquidity, execution, which I talk about in the book as well. It's just like, what is my direction? Bearish. What is the liquidity, or where is the liquidity being taken, right? Well, we see liquidity being taken here based on a liquidity grab. And what is my execution? Well, based on my entry models, this is a LGC model. So just based on that alone, that is my reason to enter. So I have my direction in my favor, I have liquidity in my favor, and I have execution in my favor. And if we even go back to, one sec, this here, right? I understand that my direction is bullish, right? At least externally. Internally, my direction is bearish. Right? Where is my liquidity? Well, liquidity is obviously under every high and low, but my liquidity has been swept here. My liquidity has been taken here. And where is my execution? Well, because we are bullish and because we see liquidity do this, then I can assume that we have a structural disruption. So, you know, that is my reason for execution. So it's kind of just the framework. What is my direction? Where is my liquidity? What liquidity is being taken? Where is the liquidity residing? Etc. etc. And then how do I get into my execution, which is via models. But yeah, I think the Fib thing is really cool. Go ahead, guys, try it out. Here are the settings. Here are the settings. Very simple. But yeah, who's to say we can't go back to our rules or go back to our roots and see some success with it? But I will say, the only prerequisite to using the Fib, I will say you have to be very good with market structure. You have to be very good with solidified points. You have to understand structural ranges. And honestly, that's basically it. If you can do that, and most of you guys already know how to find a POI, right? If anything, the biggest problem is knowing which POI to use, but maybe this could add another bit of confluence. But yeah, other than that, any questions, anything you guys want to show me? Because I do have to head out here in a few. Cool. Anything else you guys want to show us or show me? Sure. Sure. But hey, I know you're still relatively new. You have to be patient, brother. You have to be very patient. Everybody in this group has gone through the same process you're going through, and it's in there for a reason. So just be patient. You just entered the group. It's been what, 2 weeks, I believe. But yeah, make sure you follow the process, and we'll go from there. You took a loss to your EU. Do you want to show us, or should I wrap up the call? You can show us if you want. Yeah, go ahead and show me, bro. And after that, we can wrap up the call. Maybe send the just send the trading view link if you can. Cool. I see. I see. I guess I kind of explained this a bit here, where from an M1. Well, actually, hold on. Before that, what is your reason for entering? What is the reason? Well, from an external, this is technically bearish here. H1 CBOS. So here's the thing. I would say the only mistake you made. Hold on one sec. Okay, there you go. I think it's in white. Okay, there you go. I see. I see. Okay, so you're looking at this as a continuation to the upside. So the only problem with that is that we are bearish externally. So obviously I have been buying, but that's only because I'm a scalper. But if I'm looking at this from an intraday POV, like I said, the sweep earlier was present, one high, 2 high, 3 high. So once that has been swept, and then we had the internal transition here, then that confirms to me a swing, I mean a sweep, sorry, which provides me the narrative that we are technically bearish. So, but if we're looking at it just from traditional structural POV, yes, we technically have a high into a low. Excuse me. Yes, we technically have the low breaking the high, but the final high, or I'm sorry, low that went into the high, which took structure here, was taken out. You see what I mean? Because your execution was, I think, after that. Yes, it was right after the, yeah. So because structure has already been taken out, right, that confirms an LG, you know, so that because that confirms an LG, you have to wait for some type of transition. But because the LG is now confirmed, you have to assume that this is bearish. So this is not a continuation break of structure in terms of low, high retracement, and then we're looking to continue higher. This is more so a bearish CBOS, which gives you from a high into a low, and this is the beginning of the pullback. But yeah, I would just say the only thing that where I would say you went wrong is that you kind of sold after the final low that went into the high was broken, meaning this is a bearish structural range. Yeah, yeah. I mean, either way though, I probably would never sell here anywhere here. The only sell that would have realistically made sense to me would have been up until the LGC here. That's the only execution that makes sense to me. But yeah, I would just say that more than anything, you got your direction wrong. Oh, I see. I see. Sure.
Okay, bro. Thanks. So how can I how can I understand if this is going to be like a CBOS to continue higher, or just a turning point for bearish on this example?
Well, for
Do
one,
you understand the question?
yeah.
Because imagine, um, if I'm just looking for this chart that you are showing me now, okay, I can see that probably we are bullish, right?
Well,
So
hold on. It depends. What
sorry.
kind of trade are you
Okay.
looking for?
Uh, Today I was looking for a quick scalp.
For a quick scalp. Okay. Okay, now you can continue.
Sorry.
You can continue. Continue.
Oh, okay. So if this is the low, sorry, let me just try to annotate. If this is the low, right, that
Sorry.
took out the high, right? When we took out this low and we had this reaction higher, okay, how can I understand that this is not like a BOS to continue higher, you know, and just a liquidity grab for us to come
Okay.
lower?
So
I don't know
technically, yeah.
if
So
I explain
technically,
myself.
from an H1 POV, you're technically bullish. Technically,
Mm-hmm.
from the external of the external, I would say the major intraday, right? The major intraday would be
Mm-hmm.
low into high, and the minor intraday would be the internal here. But if we're going off of solidified points, this is a CBOS, right? Which is why we continued higher. So once we have this low and this is then broken, this is a solidified low. So with this solidified
Okay.
low, obviously this could be the pullback of low, high, retracement, continuation. So we're aiming for here technically, right? And then internally there is obviously scalp trends, which is the scalp bullish trend there, right? But once we reach this high, that high is solidified here, right? Meaning this is a CBOS, meaning that my invalidation for buys is here
Okay.
because of the solidified point. only because of the solidified point.
Okay. I
So
also
as soon
was
as this breaks,
but yeah.
as soon as this
So
breaks,
you can continue. Yeah, yeah.
yeah, as soon as this breaks, it's kind of just a sign that maybe I'm not bearish, but I'm no longer bullish. That's for sure. I'm for sure no longer bullish, but that does not mean that I'm bearish, right? Because then it
Okay.
also depends on how you enter a trade, right? Like what is your preferred entry technique?
Okay. But because I don't know, because can you just pull back to the time frame you were? Sorry. Because at the first place, I was looking for a sell in here because I saw this in here, in here, right? And then we broke, and this was a solidified point, right? So when we broke this, I was looking for a sell in here, but I was like, we are bullish, so I'm not going to try to sell in here because it's counter trend. And then when we took out the low, I tried to buy, and for me, there was an opportunity here. I don't know if it's right or no, but for me, this was order flow disruption, right?
Yeah, I'll zoom in right now.
Okay, yeah, and then somewhere in here was a trade to take. I didn't took.
So this is why I asked you at first, what kind of trade are you looking for? If you're looking for a scalp, because bro, I could say that everything was bearish, like from a swing POV, but I still bought during the week, which is the AUD-USD position, even though everything is technically bearish. That's why everything falls down to the type of trader that you are, right? So this type of sell here, let's actually look into it. Okay, so yeah, I would have seen this as a structural disruption. I'll show you right now.
Okay.
Because obviously we are bullish, right? Solidified low into high, meaning this is still the pullback, right? But if I'm looking at high into low, the high is not broken. High into low, the high is not broken, right? But once we have a CBOS and a continuation, right? Or I'm sorry, a solidified high here from a micro POV, the only thing that makes sense to me is a potential failed attempt. And the only failed attempt that can make sense to me here is that we've broke through here, meaning that solidified the low. And once that solidified low breaks, that is structural disruption.
Yeah. Okay. Yeah. Yeah.
And then you could have easily sold based on, let's say, the final buy, sell. But because this is why I ask you if you what type of trade you're looking for, because based on this, right? Technically, the main target you should be looking for is here.
The low,
because because you're a scalper, right? You know what I mean?
Absolutely. And this is an order block on the M5 also with imbalance, I believe.
Sure.
Yeah.
Sure. See,
yeah. Okay. Okay.
So it really just depends on the type of trader that you are, because if you're a scalper, really, bro, the H1 may not really be that effective for you.
Yeah.
But if you're, let's say, an intraday trader, then it's a different story.
Yeah. Yeah, it's my main mistake because I was trying to do like quick trades for the day if the opportunity presents on the New York, but I start always check like H1 and 13 and something like this, and maybe it's not a good idea if I'm going to just take a quick trade,
I actually have a section 2 in the book. Let me show you this.
Sorry, is this order flow disruption in here?
Where's the reaction?
On the M5.
Where's the reaction?
In here.
Well, how do you confirm the reaction?
Where I can confirm the reaction?
How do you confirm the reaction?
Because maybe we tried to react in here.
Yeah, but you see, I got you there. Look, let's go back to the example. Where is my EURUSD from yesterday? Oh, it's Monday. Oh, right here. So you see that there is technically a POI there, but I'm going based on the buy to sell that you see here, the buy to sell.
Mhm.
So we have a reaction based on the POI, but the reaction is confirmed based on the internal CBOS.
Okay.
You see what I mean? That's a very big detail.
Okay.
So if there's a
Okay. Yes.
CBOS that confirms the reaction, that means that the POI was valid. And then if that POI then
Okay.
breaks, then that is disruption.
Okay. It's not just a push. It's like
No. You can assume it like over time. There will be moves where you will assume it as that because, for example, if I'm an M1, maybe something gives me a small push, so that could be like a 5-second, 15-second order flow disruption.
Mhm. Yeah.
But you don't want to assume just yet. Right now, just get the rules correct and try to apply the rules
Mhm.
as they're meant to be used.
Yeah. Of course.
Mhm.
Okay.
'Cause
Okay.
then,
Thanks, bro.
yeah, that would be the that would be order flow disruption, and then this is structural disruption. Is when we
Mhm.
have a CBOS that
Because
confirms a low, and then
yeah.
that low breaks. So if a solidified low is then
Yeah.
broken, then we have a change of direction. Just for the short term, because
Mhm.
obviously this is still
Yeah.
bullish.
Okay. Thanks, bro.
Yeah, no worries. But yeah, any final questions, concerns? No final questions, concerns. We could wrap it up here, guys.
Yeah, I'm fine. Thank you.
Cool. But yeah, like I said, I also have a section here. Yep, here. Selecting timeframes and understanding trader types. I kind of discussed it in a previous Zoom. Excuse me. Where a certain type of trader should only have, or any type of trader should really only use, I would say 3 to 4 timeframes at most. I don't really use, for example, like whenever I'm scalping, I don't use like anything above really H2, like H4 daily, weekly, whatever. And if I do, it's only to find weekly targets, daily targets, stuff like that. So understanding the type of trader that you are, and then also knowing what types of time frames to use with that. Like for example, as a scalper, I'm focused on the micro, the scalp, and the minor intraday for the most part. Those are like the main time frames that I'm using, or structural levels that I'm using. Sorry. And if I was an intraday trader, then I'd be focused on the scalp, minor, major, and maybe swing. It just depends on what type of intraday trader. And if I was a swing trader, then I'm only focused on the major intraday, the swing, and maybe the position. So I do cover that here, the different types of traders, and then like a small like example of what types of time frames you would use as the potential trader. So I have that covered there as well. But other than that, guys, I'll send this over here in the next maybe like 2-3 hours. But I do have to go, so I appreciate you guys hopping on. And if you guys want, hop on the Zoom, the free public Zoom tomorrow. And yeah, we'll just go from there. And if not, I'll see you guys next Friday.